You have $5 million sitting in your bank account right now. A quick question. Are you sleeping peacefully tonight, or are you lying awake wondering how much of it the IRS is about to take? Because here's what nobody really tells you. Making money and keeping money are two completely different games. And in the next 5 minutes, I'm going to walk you through the top 3 strategies the multi-million-dollar families use to protect their wealth and pass it on wisely. This matters whether you're still on your way to becoming the high net worth or you're already there. Because what I'm about to share isn't just about money. It's a mindset shift that helps you build a financial future that supports your dreams and the people you care about. These are the strategies I learned after working years at a top-tier strategy consulting firm through thousands of conversations with wealthy families, including my own father and grandfather who run our family business in China. And stay with me, because strategy number 3 causes the most family dramas, but it's also the most important one. And if you want to hear more conversations about wealth, business, and strategies, don't forget to subscribe to my channel. Let's get started. But before we dive into the strategies, let me ask you something. What's the difference between someone who earns a lot and someone who's actually wealthy? Most people get this wrong. They see someone with $500K salary and think, oh, they're rich. But here's the plot twist. That person might be what we call a Henry. High earner, not rich yet. Why? Because they're drowning in debt, living paycheck to paycheck in a nicer house. So who are we actually talking about here? A high net worth individual isn't just someone with a fat paycheck. According to Investopedia, it's someone with at least $1 million in liquid assets after accounting for their liabilities. Not their house, not their cars. It's called hard accessible cash or marketable stocks. And there are levels to this. $1 to $5 million, you're the high net worth. $5 to $30 million, now you're the very high net worth. Then over $30 million, you're the ultra high net worth. Ultra wealthy are running private philanthropies, investing in multiple businesses, and here's the kicker. They have access to private investment opportunities like hedge funds and venture capitals. The SEC calls them accredited investors, which is a fancy talk for, sorry, this wealth building tool isn't for regular people. They also mix liquid assets with illiquid assets such as businesses, real estate, or art. This balance means they can tap cash when needed and still grow wealth over the long term. But as their fortunes grow, they will face more complex issues, like planning who will inherit, aligning their wealth with their values, and keeping up with the changing tax laws. So let's have a look at the top 3 strategies they use to deal with these complex issues. Strategy number 1, diversify beyond traditional investments. Don't put all your eggs in one basket. You've heard this advice a million times, right? But here's how the wealthy actually do. Instead of relying only on stocks and bonds, they branch out into private equity, hedge funds, venture capitals, and real estate. Here's a real example. I watched one family spread their wealth across 7 different asset classes. They had rental properties generating passive income, stakes in startups, 2 failed, 1 became a unicorn, fine art that doubled in value in 5 years, even precious metals as a doomsday insurance policy. But, and this is important, they still use boring stuff like high-yield savings accounts and ETFs for stability. Some even pursue investments that align with their values, such as impact investing in sustainable or socially focused projects. Why? Because when one market dips, they have 6 other income streams still printing money. It's like having 7 jobs, but you only work 1. Strategy number 2, optimize for tax efficiency. Now, I know what you're thinking. Taxes? Boring. I'm out. But wait, this is where it gets very spicy. You know how you feel when you see your paycheck and the government took 30%? Well, imagine this happening to a $10 million. Yeah, these families are not letting that slide. So what do? They use every legal loophole in existence. Tax loss harvesting sounds complicated, but it's basically, hey, I lost money on this investment, so now I don't have to pay taxes on my winning investments. It's like getting a discount on your taxes for having a bad day. Offshore trusts? Yep, legal. And they let your money grow tax-free while you're sipping cocktails in the Bahamas. Irrevocable trusts. This is I'm so rich, I'm gonna give away my money to avoid taxes move. It removes assets from your estate, lowering what the government can touch. And here's my favorite, charitable giving. You donate to a cause you care about, you look like a hero, and you can deduct up to 60% of your adjusted gross income. It's philanthropy with benefits. But here's the catch, and this is why these families have professional accountants teams. Tax laws change constantly. Like, you could be totally legal 1 year, and the next year, loophole closed. So you have to stay vigilant, almost obsessive, about monitoring changes across different countries. It's exhausting, but it's also how you keep millions instead of handing them to the government. Strategy number 3, plan estate and legacy. Okay, this is the big one, and honestly, this is where things get messy. Here's the brutal truth. Without a plan, your wealth doesn't go to the people you love. It goes to the lawyers, the government, or worse, the wrong family members. I've had conversations with my own family members about succession planning for our family business in China. And let me tell you, these conversations are never easy. Why? Because it's human nature to be selfish, and everyone wants the bigger piece of the pie. So wealthy families use tools like family trust to protect assets from creditors and avoid probate. Family constitutions, yes, like the US Constitution, but for your family, outlining who runs the business and how decisions are made. And strategic giving. In US from 2026, you can give up to $19,000 per person per year without triggering gift taxes. Couples can give $30 million over their lifetime tax-free. That's insane. And if you own a business, you need a succession plan. I cannot stress this enough. Deciding who runs the company prevents absolute chaos when you're gone. Here's the kicker. The earlier you bring the next generations into these conversations, the better. It builds understanding, prevents resentment, and keeps the family bonded instead of battling in court. But it's hard, really hard, because no one wants to talk about death or admit they want a bigger share. So high net worth individuals aren't just sitting on piles of cash watching it grow magically. They're using smart strategies. And here's the best part. Even if you're not yet in a $1 million club, these lessons still apply. Diversify, stay tax smart, and think about the legacy you want to leave. With patience and a clear plan, you can build a financial future that supports both your dreams and those you care about. If this helped you see wealth differently, subscribe to the channel for more talks on business, wealth, and personal growth. See you in the next one.